Mortgage rates edge higher to nearly 7%. Average rate on a 30-year mortgage remains more than double what it was 2 years ago. So they rose again this week. Bad news for Americans seeking to upgrade or buy their first home. The average rate on the 30-year fixed mortgage ticked up to 6.90% this week, up from 6.81% a week ago, according to data released Thursday by mortgage buyer Freddie Mac. A year ago, the benchmark home loan rate stood at 4.99%. Meanwhile, the average rate on a 15-year fixed mortgage, popular with those refinancing their homes, climbed to 6.25% from 6.11% last week. A year ago, it was 4.26%. The average rate on a 30-year mortgage remains more than double what it was 2 years ago, when ultra-low rates spurred a wave of home sales and refinancing. Homeowners who locked in those lower borrowing costs 2 years ago are reluctant to sell and jump into a higher rate on a new property. High inflation has driven the Federal Reserve to raise its benchmark interest rate 11 times since March 2022. Its Fed funds rate has hit the highest level in 22 years. Mortgage rates don't necessarily mirror the Fed's rate increases, but tend to track the yield on the 10-year Treasury note. Investors' expectations for future inflation, global demand for U.S. treasuries, and what the Fed does with interest rates can influence rates on home loans. Now, the interesting thing about this is it's getting to the point where it might make way more sense to just stick your money into a high yield savings account and get nearly 5% on a return on your money without having to do basically anything, right? And it's super, super liquid. The problem with homes is that typically it takes time to get out of them if you need to get out of them. Whereas if you just have a whole bunch of cash making 5% on your money, would you really complain about being able to do nothing and get a 5% return? I wouldn't complain about that. And to be frank, in this type of situation, it might make just more sense to just keep stockpiling cash. Now, the good thing about these interest rates continuously increasing is that it's going to get to the point where so many people are not going to want to buy homes because it's just too expensive to afford the monthly payment. So there's going to be probably pretty massive cuts on the sticker price of these homes. So if you have a huge stockpile of cash, you might be able to buy some homes pennies on the dollar, right? Because what many people may not know is that the majority of the billionaires and centimillionaires that have that type of net worth in real estate got that in basically depressions, right? They got that in market crashes. They had a huge stockpile of cash that they were able to buy so many properties for dirt cheap and ride the wave all the way up to the top, right? A lot of them basically did that. So some of them might have had made their first million in a crash, right? Where they bought something for maybe 200 grand cash basically, rode the wave of it all the way up to a million something, and then after selling it minus taxes, etc., they were able to clear basically $1 million, or just do the 1039 exchange or whatever to not pay any taxes and clear $1 million. So that's what a lot of them did, where they just bought super super cheap in the best chances, best opportunities ever. But the thing is, you don't even have to do necessarily that with real estate. You could do that in stocks. If stocks end up crashing horrendously and you have a whole bunch of cash just sitting on the sideline and you just capitalize on that situation and be like, I'm going to stick all of my cash into the market at this super low point, who knows? After 5 years, after 10 years, that might have tripled. That might have quadrupled. Who knows, right? So, to me, if you don't have to buy a home right now, I would not buy a home right now. I would just keep on stockpiling a whole bunch of cash because if you find a deal that is super amazing for you, even without like a high interest rate, if you have to do like a mortgage on it, it might be worth it just if you get the price point on that home to such a super low level, right? So, for example, let's say that there's this house in like a nearby location or something like that where the home would like in normal circumstances probably be worth around like $600,000. Let's just say that as like an example. But the person hasn't been able to sell their home at all. They need to get out of the home because it's just too expensive for them. And they just need quick money. Like maybe their financial situation just got bad, money's getting tight, but they need the cash pretty quick. Well, you could basically be doing something like you're willing to close with no checks on the home or like no like due diligence on the home in a sense where like you don't like wait and like check to see that like oh something's broken, etc., foundation issues, all that sort of stuff. And you're like, okay, I'm willing to do that and I'm willing to close very quickly, but I want like $150,000 off of the price point or $200,000 off of the price point. Now, obviously, it'd be unlikely for you to get that type of like deal, but you could potentially have like some sort of like discount on the price of a home if people are just simply not really getting any offers, right? Because this isn't like a situation where before, I think like not even like a year ago, people were like offering like 50K, 100K over sticker price for homes. But like now, who knows? They might be in a situation where they might have to sell a home for a super big like price cut. And if that's the situation, if you have enough cash to buy that home, either with a discount, either with like a 20% down mortgage with a horrible interest rate, or in cash, which would be way better, you might be able to pretty much immediately gain massive amounts of equity in that home. Because if the home is actually worth 600,000, but you bought it as if it was worth only 400,000, that is a huge increase in your net worth because if you just basically hold onto that home due to the location that it's in, that this home is probably actually going to be worth more so like 650, 700,000 after 5 years or after 6 years or whatever. So you're going to actually get like a crazy, crazy increase in your net worth. Like, this is the interesting thing, right? Because I mentioned this earlier, but I seen a home that someone bought like 10 years ago for like 100,000, $150,000, and they sold that home recently for close to $1 million. Like, what can happen to these home prices after like 10 years, depending on the location, is insane, right? Real estate can dramatically change your net worth. Like, imagine you bought something for like $1 and then like you forgot about it, and then 10 years later it's worth $10. So that $1 turned into $10. That's pretty insane, right? Even though it doesn't really sound like that big of a deal, 10 times the amount of money that you had only 10 years ago is awesome.